Well, well, well. Welcome to Crypto Fire Outpost, Episode 6. How much Bitcoin should I buy? Yeah, so this question comes a lot. I hear it on other YouTube channels, and the different people are always asking, well, okay, I'm convinced that I want to buy Bitcoin, but what should I do? I have X amount of dollars. Should I invest this? Should I put it all in right now? And so I compiled a list of the different things that I've heard, and of course there's more, but these are just some of them. So the left side here is what others say, which I find confusing. So you have some YouTubers saying just put 1% of your net worth as insurance, right? They're treating Bitcoin as insurance. And the problem with that is that if you don't have a lot of net worth, you might be putting in a very small amount that you're not going to reach your financial independence goal anytime soon, because 1% of very of minimal stuff is going to always stay minimal. All right, so I'm not sure that's a good advice to follow. Second thing is don't invest what you can't lose, right? And so I always ask myself, like, well, I don't think anybody, especially my situation, is like I can't afford to lose anything, right? So does that mean that I shouldn't invest anything because I don't want to lose it? That's like it kind of ties in with the second one here, or this next one here. It says expect everything to go to zero, right? And that's kind of I don't know if that applied to Bitcoin also. Maybe that's just a generic term for meme coins or altcoins, which okay, I completely agree there, right? Anything other than Bitcoin, I would expect that it has a very high probability that it'll eventually go to zero. But when it comes to Bitcoin, I think it has a less probable chance of going to zero than like Yahoo or Hertz Rent-A-Car going to zero, right? I mean, I can see Yahoo phasing out. I mean, Google has pretty much dominated. Yahoo used to be number one back in the dot-com days, but now Google's taken over, and I don't know anybody who uses Yahoo anymore for anything. Maybe to check some news or the weather, but and then Hertz is I just picked a rental car company where Hertz was like the number one rental car company, but in the future, Tesla today actually announced and showed off their robo-taxi or robo-cab, right? That's where if you can, instead of rent a car, you have all these robo-taxis out there. You just call one like an Uber, but essentially it's a private car. You don't have to deal with anyone else. And it's going to be cheaper. It's going to be more convenient. You don't have to park. You don't have to, so it's, it might just take over Hertz at that point, right? I mean, you can always make the argument. I'm not trying here to argue the case that Hertz could buy a whole bunch of these robo taxis and do this, but Tesla may just shut them out. Tesla's like, yeah, we're not going to sell any company mass cars. We're going to be the number one rental car, or the robo taxi company out there. So then that's going to put Hertz Rent a Car in trouble, and maybe even Uber and Lyft, right? The future is kind of unknown there. So I think those type of companies, they're big and they've been number one. They have a higher chance of going to zero than compared to Bitcoin. So the next one is advice coming is, hey, you should dollar cost average, right? So dollar cost average, in general, the concept, I get it, it's pretty good, but the problem is there is that if you pick too low of a dollar cost average, and let's say you're investing, okay, I'm going to put $100 in every month. Well, Bitcoin is growing in so fast that I mean, if I'm, as my previous videos have shown, if it's a 40% CAGR, right, compound annual growth rate, do you really want to wait and kind of invest over a long period of time? I think this may be maybe more valid during like a bear market, and we'll get into that later too. But anyway, just as my opinion is that it's because it's growing so fast, and it's going to compound and grow at 40% CAGR on average. I would think that if you're thinking long term, like you're going to at least keep it 4 years, just put in as much as you can, right? Is one thing. I think Michael Saylor has done that too. He just keeps, and hit Michael Saylor's concept of dollar cost averages. He just buys whenever he can, as he gets more revenue coming in, and is able to acquire more cash through loans or debts or whatever. He that's his version of DCA. There's another version of DCA called dynamic dollar cost average, and that's where you may be investing on a normal schedule, but when the market drops, when Bitcoin drops lower, you put in even more. So if you're putting in $100 a month, but Bitcoin, let's say, drops 50%, then maybe this month you put in 200 or you put in 300, right? The lower it drops, the more you put in. I like that concept in general, but then you're also, if you try to adopt that and you're waiting for a while you're still stuck with dollar cost average, which is slow, and then you're trying to move most of your money in when it drops significant enough. But how do you know how low? I mean, it could drop what, 10%, 20%? What determines it? And it may not reach your, not, if you're expecting Bitcoin to drop 70%, it may not ever reach that again. If it goes 70%, I'm going to invest 50% of my money, right? Or something like that. I'm going to go pretty much all in, but it may never reach that. So then you're just kind of out of the market and Bitcoin just leaves you behind, right? You kind of miss the train with the majority of your capital. So it's a problem with that one. And then you have the idea of lump sum, you only live once type of things where you just go all in right now, right? Why not? Just go all in. The problem is here, of course, is that depending on your situation, uh, if it drops a big time and you went all in, you may panic and sell. That's a problem with going all in. Anyway, the next thing is buying, let's say you just buy 50% Bitcoin, 25% altcoins, and then keep 25% cash, right? Different YouTubers, different channels have different advice on what you should do. So in terms of altcoins, to me, altcoins are risky, right? And then also holding cash is dumb, right? Holding cash has been known to be like, hey, you're just inflating. So holding 25% cash is a lot. And I get it. I get what the YouTuber's trying to say is like have the cash available to be able to buy the dip and all these things like that, right? But then again, is like what dip? Is it, when it dips to 5%, 10%? I mean, you got to put a strategy together. But then anyway, it's just kind of it's like if you're putting 25% cash, that's a lot, and then you're putting 25% in a lot of altcoins. I think maybe that's a more advanced thing. I understand the concept, and that's definitely a future episode to talk right about. But I think especially when you're starting off, just go deal with Bitcoin. You hear another advice is diversify into index funds, real estate, like diversify your portfolio. Don't put all your eggs in one basket, right? And this one is like, so if you know like if Bitcoin is the hardest asset, if you study it and you learn, you're like, hey, this is going to be the hardest asset, number one, on the planet, right? Number two, it's going to be pulling money and money from all different other sectors like real estate, whatever, right? Stocks, equities. It's going to people who instead of buying real estate, they'll just buy Bitcoin, right? Because it's a lot less headache, blah, blah, blah. There's tons of reasons why someone would want to do that. So the question is like, wait, so if you know this is the hardest asset, then why would you diversify into something else? Because you think it's not going to be the hardest asset like overnight, but even if it's not, even if hypothetically something came along that was the hardest asset, Bitcoin already is gaining so much momentum and has such a huge network effect. There's so much money into it that it's not just going to like switch over instantly, number one. So it's not like it's going to drop instantly. And number two, it's going to be very hard for something like that, some other competitor to come in and start pulling everything in. And it's not going to pull it in instantly. It's not like, it's like, oh, there's Bitcoin version 2.0. Oh, wow, everybody just exit and goes into 2.0. I don't see that type of scenario happening. I mean, I wouldn't do it. Just imagine if someone, a company or another person, another Satoshi, even anonymous, let's say, came out version 2 of Bitcoin. So would you trust it? Would you just move all your money into that? I mean, they're saying it's better, it's faster. We know like what if there's a bug? What if, you could lose all your money, right? Like Bitcoin already has 15 years of history, it's kind of trusted. So it's gonna be really hard to convince someone like me to move into like a Bitcoin V2. And in a sense, we've had Bitcoin V2s. Bitcoin has done hard forks, soft forks, I mean, many, many times over. There are many people with different ideas of how to improve Bitcoin. People have tried to fork it and try to create a version of Bitcoin, but none of them have nearly the same market cap, even close to Bitcoin. They all failed essentially, right? So when people talk about diversifying and stuff like that, I understand it. I really think though that a lot of people who become rich, they focus on one thing, right? Because if you don't focus your energy on one thing, like just take like Jeff Bezos or something like that, he focuses on Amazon. And then once you become rich and good at that one thing, then the money that you make from that, you can diversify, invest in other things, find new things, right? But I've never heard of anyone becoming super rich by just like, okay, I have 100 ideas and I'm going to do all 100 ideas all at once to diversify to become rich. No, people usually they pick their top idea, they focus on it, they roll with it, make a lot of money from it, and then they can start spreading it out and doing other things and hiring other people, right? But you have to focus first Otherwise, if you dilute your focus, you're going to dilute your results and returns. Right? I hope that kind of makes sense. So diversifying, another thing I heard too, or I think about is that, if you know something is going to be a clear winner, then why would you diversify? Right? It doesn't make sense. So just because it's winning and it's doubling every year, so it's doubling, so I'm just gonna take it and put it into something else that is not doing as well to diversify. Right? I mean, does that even make sense to you? Right? So if you were to invest in let's say uh, an employee, right? So you have an employee who's a prodigy, a genius, and that person is generating a ton of revenue for the company, creating new accounts, stuff like that, or a salesperson. So, he's doing so well. So, you know what? I'm gonna cut back on his hours, not have him work so hard, and I'm gonna add hours to some other employee for him to work on the projects and stuff. Like, why would you do that? Just let the genius work and have him work, pay him better, invest more into that genius, and have him come up with more great stuff to make even more money, right? So, anyway, last thing here is so Michael Saylor here is he talks about being a Bitcoin maxi, a double maxi, a triple maxi. Now he has different the Bitcoin maxi to him. It's around like investing 30% of let's say your net worth or liquid into Bitcoin. Double maybe 70%, and then triple maybe 100% plus borrowing money or something. Right? Is taking on debt, smart debt, to be able to buy. That's what MicroStrategy as a company has been doing. But hey, the problem is here is potentially is that if you need the money soon and you put a lot into it, like a triple maxi potentially, then especially if you borrow money, you're going to be sweating, right? If it drops. So if you borrow a lot of money and you borrow the wrong type, you have the wrong type of debt, and you can't make those debt payments, and Bitcoin starts heading the other direction, you may be in a world of pain. You may be forced to sell, which would be bad, right? Being forced to sell it just to make the payments. So anyway, so if you're not going to do any of these, well, there's a little bit of truth. Let me back up. I'm not completely hating on any of these one things. They're all right in certain contexts, right? They're all right. This is good advice, or kind of they are correct that this applies in different scenarios in different contexts. But in general, I was trying to think, for myself, what is kind of my experience in learning of the best strategy to invest in and buy Bitcoin. So my opinion is this, my Bitcoin buying strategy, okay? Instead of DCA, dollar cost average, or other stuff, I have something I made up I call DFD. So don't feel dumb investing strategy. And what that means is that a lot of times I find that people, what happens is that get emotions, they get emotional, and that the emotions take over, right? When the Bitcoin price is super high, they panic. You're like, oh my gosh, I'm missing the boat. So they start buying at the ultimate high. And when the Bitcoin drops a significant amount, just through volatility, it could go down 30%, 50%, say 70%, right? They panic because they go, I'm going to lose my whole life savings, right? And so this emotional is like, you feel dumb at the end of the day. It's like, oh, I shouldn't have put so much. Oh, I shouldn't have bought at the high. I shouldn't have done this. I shouldn't have done that. So really the biggest risk in terms of investing, I mean, this is not just with Bitcoin. I think this applies to if you were to invest in other things too. The biggest risk is actually you, right? It's not Bitcoin, right? So it's the risk of going in all in, or the risk of selling is your emotional state, but it really depends on your situation to that level of detail, right? So you can go all in if you have a nice income stream coming in that you're sure like, hey, I can go in. I'm not going to need if it drops down a lot, I'm not going to care because I don't need to pull it out. I won't be forced to pull it out to put food on the table for my family, right? And so forth. So that's why I think there are some of course details in deciding it, but the general philosophy is that whatever you put in, whatever strategy you're coming up with in your head, just analyze it so that if it goes up, you're not gonna feel really bad. If it goes up, and you're not gonna feel try to panic sell when it goes down, right? So in a sense, I think Bitcoin is is a lot less risky than even stock or real estate, and we can get into that into a future episode, right? But I was just trying to point out that the risk is actually you as a person. The Bitcoin itself is a lot risky than the stocks and real estate. At a high level, the reason is because real estate stocks, they have third party risks. They can do a whole bunch of things. The government can step in and take it and all this. Bitcoin doesn't have a lot of those risks. It eliminates, if you take out everything that you don't like about stock or real estate, I mean, just list them. What don't you like about becoming a landlord? You could probably list at least 20 things. What are the possible things that can go wrong with owning company stock? You could probably list at least 10 things or 20 things, right? But in Bitcoin, what can go on with Bitcoin, right? I mean, I've heard quantum computing. It hasn't been hacked in 15 years. Even the best hackers, it's the strongest security in terms of encryption, in terms of computing power to protect the network. So I'm not worried about hackers. So can quantum computing do it? Okay, yeah, that's some far in the future thing. But even if that were to happen, there's solutions for that. What else can happen really to it? I mean, whatever you think could have happened to it has already happened. Oh, the government may ban it and stuff. Well, the U.S. is not going to ban it anymore, so that risk is gone, right? Even China, even Russia, I think is starting to opening it up for trade now. They're trying to legalize crypto to be used for international trade because of the sanctions happening. So, I mean, hey, right? So the end of the line is if you just follow like this DFD strategy, you are going to be excited when Bitcoin goes up, right? Because you're doing it, don't feel dumb. I'm putting enough money in there so that if it goes up, I'm going to get excited. And at the same time, if it goes down, I'm also going to be excited because I have enough money either coming in or I have enough money that I will put more in. You know, I'll sell my other stock or sell something else to buy more Bitcoin if it drops significantly. And in this way, you end up accumulating more over time. You're not going to fall into those pitfalls of panicking uh, and feeling you missed out and feeling like, oh my gosh, I'm panicking. I need to sell everything, right, to do something, right? So that's the DFD investment strategy. So whatever that incorporates from the previous slide of all the different strategies, just think about, create the scenario in your head. What if going up usually is not, yeah, even going up, if it doubles in the next, let's say, 6 months, how are you going to feel? If it drops 50%, how are you going to feel? What would you do? Just map it out in your head and adjust the dollar amount, adjust your strategy of how to invest based upon that. And so as long as you have a plan in place, then you can look forward to that and not feel bad either way. And that long term, ultimately, though, the basic rules is that you just want to try to keep acquiring more Bitcoin, right? And of course, you don't have to buy full Bitcoin. For those who are new, you can buy parts, you can buy pieces of Bitcoin. You can buy zero point 0.1 of a Bitcoin, 0.05 of a Bitcoin. It goes out to 8 decimal places. So you can buy a dollar. I mean, 25 cents. Technically you can buy a penny of Bitcoin, right? But you can buy just keep acquiring more Bitcoin until you reach your fire number, right? At that point, then you may not have to acquire anymore. You can just coast. And from my previous episodes, I show if you reach a certain level, you can probably coast and still withdraw as Bitcoin goes up with a certain compound annual growth. Let's say it goes up 40%, you could take out half of those gains and so forth, and it'll keep compounding and growing, right? So that's the next thing is that you don't want to withdraw any amount of money above the compound annual growth rate so that Bitcoin can compound. So whatever spreadsheet you create and calculate every milestone, this is a 40% increase. That means my amount will reach this amount, and then if it goes up 40% again, it reaches this amount, and this amount's the next one. Every time it reaches one of those, just sell it because you hit that milestone, you sell it, you take that cash, and sure, I mean, if you can just hold it, that's even better, right? Hold it for as long as possible, and you don't sell it. But even if you do sell it, as long as you keep selling, you reward yourself, and that's great because you know that Bitcoin ultimately, at least this is my opinion and my belief, is that it still has a long way to go. And if you don't think Bitcoin can reach 600,000 a share or anything, how is that possible? I mean, just look at like Warren Buffett's Berkshire, right? You can buy the Berkshire stock. The Class A shares, they each go for one share. I think it's over like $600,000 for one share. I remember, I know someone that bought it probably 20 years back or something like that, over 20 years ago. But it was like 80,000, 90,000 a share. Well, now it's 20 years later, $600,000 a share. I mean, it's very possible that these things can go up. And well, in the future too. I mean, I'm going to go to the next slide of if you're a beginner here, what you should do and what to buy. So you don't have to even worry about that. I'll make it very simple for you, right? So I have this beginner level. So how to buy Bitcoin. So my advice is that if you are convinced and you want to start buying once you have your strategy, your DFD, don't feel dumb strategy. Now, how do you buy it? So if you're a beginner, buy the spot Bitcoin ETF. There are just two. I'll give you two choices here to stick with one of these two. Either by IBIT, which is by BlackRock, the largest U.S. I think largest it's the largest U.S. investment like what the word I'm looking for here I can't investment bank, so to speak. I mean, they hold a lot of the assets and stuff for a lot of America, and then of course Fidelity. Everyone knows Fidelity. So what I would say, these are the two. They're basically like, it's like buying a stock. Okay, technically it's an ETF, but there's like like a stock. It has a ticker symbol. Just look up IBIT, IBIT, and then there's FBTC. There's either one. Buy it. It doesn't matter. I mean, the only thing I would say is that first of all, their annual fee that they charge you is like 0.4% every year. But when you buy it, just make sure that if you buy and sell, that whichever one has a lower price for commissions. I mean, a lot of times I don't think they even charge commissions for these, but if they do, choose the other one if it's a lower commission when you buy, if you buy through sell. And you can buy these ticker symbols, so to speak, through your major brokerage account, like Schwab or Fidelity, or like Ameritrade, whatever ones that have been around for a while where you have been using it and you trust it. Whatever you use right now to buy your stocks, whatever you use to store your IRAs, your Roth IRAs, or whatever, right? Those major banks, major investment brokers, right? Use those accounts and buy this ticker symbol. That's it. Do not, as a beginner, download any apps or use any other website. I understand Coinbase might be okay and stuff, but I don't want you to use Coinbase right now, because leaving your Bitcoin on the exchange, if you don't have self-custody, who knows? You just don't know. Coinbase may one day have a problem where you may not be able to uh, self-custody, or something may happen to it. There's a risk. They can even be hacked. But with these large banks like Schwab or Fidelity, if anything happens to your funds when you buy one of these, is like buying a stock, it's on Fidelity and Schwab. They'll cover it. That's the general consensus, that before anything happens, it's possible they can get hacked, but at least they're so big that they'll cover it. And even if they are having trouble, the government will cover them. Right? So that's where you're too big to fail type of thing, right? Like the US is not gonna let Fidelity fail. Like even if Fidelity is in big financial trouble, they will bail them out. All right. So that's a nice thing about just buying directly through your brokerage account here, like through a major bank, investment bank. I don't know what we call these, right? But the other thing is no apps either. So I know there's apps that maybe a friend might tell you, or a referral, like, oh yeah, to buy Bitcoin, download this app and use the app to buy. Please do not do that, especially if you're a beginner, because I don't know if the application is actually a wallet. Because if it's a wallet app, then it may actually download the Bitcoin to your wallet. And if you lose your phone, someone has access to it, they can just transfer that out to their account, or it can get stolen. Your phone can get hacked. It's just so many problems and you have no way of recovering it, right? And I get it. There are some apps that you may trust, like, oh, there's PayPal and Venmo. I can buy crypto on the. Just don't do it on the app. Try to buy it through a brokerage like Fidelity or Schwab, and just buy the spot ETF. Just do that for now, okay? So that's a very important rule. This is just a beginner thing. Of course, later on we talk more advanced and you get more familiar with it. Yeah, then you can start self-custodying and you can start doing a little more advanced stuff. But okay, anyway, moving on. So the question is like when to buy Bitcoin, right? So you want to buy it, the DFD strategy. There's one thing I want to touch upon very quickly, because there's a little bit of timing, but I want to keep it at a beginner level. And and that's called the rainbow chart. I know it's pretty silly, but I think it's something that if you're looking at the time, go to this. There's if you type in Bitcoin rainbow chart, you'll see a chart that looks like this. It shows Bitcoin's price over since like 2014 going to today. And the idea here is they mapped out that with the growth, it's called a rainbow chart because there's different levels of what they classify as, is Bitcoin low relative to its expectation, or is it like overpriced, right? Very high level. I don't want to get too much into this episode, but as you can see right here, usually the consensus is people always, the YouTubers or the Bitcoin community is like after a halving, the price goes up. So there's halving, price goes up. I'm sorry, price goes up and then it goes back down. And then halving happens, the price goes up and then it goes back down. and then after halving, it goes up and it goes back down. So this is another halving right here. We're expected, today is October 12th right now, and Bitcoin's around 60,000, so and so it is 62,008. So it's like 58,000 yesterday. This is funny, but in any case, it's expected to, very soon, because it's after the halving, and around this time it's expected to go back up. But in general, I just wanted to just say, like, okay, this might affect your DFD decision, or even if you really want to go with like DCA and you don't want to do my DFD thing, just go with traditional dollar cost averaging. Well, if it starts heading up this way, so you can see, right? So you may just want to maybe put in an initial amount first, like a lump sum of some amount, and then DCA after that. Don't just start with the DCA. Is my point. So you can look at this and just follow this as a basic level. Once it gets to the yellow, then that's maybe where you just hold and don't buy anymore, right? So you DCA, you maybe put in some dollar amount here, just figure it out, apply the DFD strategy, is my opinion. Just make sure you don't feel dumb. Apply a certain amount in right now, and if it goes down a little more, you can put in a little bit more, and then but if it starts going up, you can still dollar cost average in, but maybe stop when it starts getting to the light green or yellow, right? Just stop and just hold it, and it goes up here, and hopefully when it starts hitting up into the oranges and the red here, it will reach your first level of the crypto fire number, where you can pull something out, right? Um, I would leave enough and not pull more than it compounded, but you can. I mean, like I was saying, just if you're gonna feel dumb and you're just like, hey, I'd rather just get my initial investment, it already doubled, sure, right? If that's what it takes for you not to feel dumb, going back. But if you scroll down on here too, this is the legend. It's just kind of neat. It just shows you, like the lowest part is basically a fire sale, so it's fire sale. So it's saying, buy like crazy and so forth, right? So when you get to the yellow, as I was saying, you can hold it, and then here, as it starts going beyond the yellow, there's different bands that once it hits the red, that's kind of expected. Like, wow, that's kind of blown expectations. That's going to be super, 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 super high in terms of what is expected in terms of the average of where Bitcoin should be, or the fair value, right? Anyway, just a simple thing if you wanted to add a little bit of time to there. I'm not advocating to day trade back and forth from here, or to use this as a reliable indicator, but just gives you an idea of just a little bit on timing, because it's been fairly right for the past, what, 10 years, right? It just gives you a general idea. But who knows? That you never know, because if a nation state adopts this, or you have a country, right, or a big corporation. I mean, can you imagine what would happen if Apple decided, it's like, hey, you know what? We're going to start. We have billions of dollars. We're going to allocate half of it into Bitcoin. I don't know how much they have in reserve in cash. Last time I heard, it was like 200 billion in cash. So if they allocated 100 billion in cash and Apple does it, I mean, Bitcoin may already be, like well above uh, like 300,000 to 400,000 if they're doing it, because other big companies will come in. They're setting the new standard. I mean, if a country starts doing it too, a major country starts doing it, you like even China, or especially America, So, but you never know what will happen. But the bottom line is that if it's somewhere down here, it's probably a good time to start putting your money in right now. But if you look at the overall, just the trend, it's kind of like, okay, once it's up here, stop putting in. Maybe just save the money, you have income, and once it starts dropping back down to here, start buying back in into the next cycle, right? But if you look at Michael Saylor's strategy, he just buys whenever he can, so as soon as he gets the money. Because long term, I mean, do you really care? Right now it's at 60,000. Even if it goes up to 80, also around here, like 100, like, ooh, well, that's pretty high right here, 189,000. But you hear people of hitting $1 million, in the next, like, having here potentially hit 1 million and above. You make the decide. You choose yourself. But if there's no harder asset, and this thing is gonna, you have a very strong probability that this thing's gonna keep going up for a very long time, and has a long way to go, and it could be into, as Michael Saylor predicted in my other episodes, $13 million per Bitcoin in the year 2045. Then like, just buy it around here, hold it if it's above here. Like, don't buy anymore, just hold it, sell some maybe, like I was saying. If it drops back down, start buying again, and just keep doing it. Keep doing that, and you'll be happy. And I think your future generations will be happy too, especially if you be able to hold it through. Anyway, so back to the spreadsheet here. Okay, so that's pretty much it. And I added this advanced level tab because I know there's questions on once you're familiar with Bitcoin and you're able to confidently purchase it and have a good strategy and you're in a rhythm, then you might ask certain questions like, hey, should I pay off my debt or buy Bitcoin? Like if I have a mortgage, if I'm making a lot in Bitcoin, should I pay off my house debt and stuff? Should I buy real estate or should I buy Bitcoin? If you have some money right now, what should you do, right? Should I sell my real estate that I currently have to buy Bitcoin, right? Should I self custody Bitcoin? So I answered no already if you're a beginner, right? But this is the advanced level topic. I just wanted to give kind of preview for future episodes. I'll be talking about these type of questions. Buying Bitcoin in your retirement account. With different types. How do you do it? What's the best way, or in my opinion, what is a good way or best way of doing it? Future episode. Future episode. Alrighty, alrighty. Wow, a lot of stuff, huh? Anyway, hey, well, thank you for stopping by again. I hope to see you in the future. Be well.